Hey everyone, welcome to a new vlog. Let's learn about small case investing today. What are small cases? Now let's go straight up into the website smallcase.com/search. If you go into the website, you can see something called a small case. These are expert built portfolios for every idea, be it a small idea or a large idea. And these are thematic portfolios where you can invest. And these will be rebalanced from time to time. So when I go to small case, now I can see first of all, these are the small cases sort by popularity as of now. So now suppose I want to invest based on my returns. So I come here, click on the popularity. I change it to the returns of the last 1 month. Okay. Now, whereas the maximum returns I see is basically in precious metal trackers. That's where I am seeing my maximum returns. That's about 18.11% returns in the last 1 month. You, each small case will charge a different charge as per their wish. So now this precious metal tracker is basically a free access small case where you don't have to pay any commission or any subscription fee to avail the service of the portfolio. Whereas there are subscription based portfolios as well, like 21G balance fund asset allocation. So while we go down 21AG, momentum count, Aspire diversified asset portfolio, Aspire diversified factors portfolio, etc. So these are in the decreasing order of the last 1 month return. Now, if you want to see the returns over a longer time, you can see here, change it to 6 months, you can see the 6 month returns. Then you can see the 1 year returns, 1 year CAGR. So that CAGR is in decreasing terms again. So these are the different values. So now you can see the 5 year ones also. Yeah, over the last 5 years, these have given this much CAGR. That's what it is mentioned here. Now, that's about that. Now, first, once we get in, now if we select this, we can see. So, if you have invested something in it and what is your returns, etc., you can see here. If you have invested something and what is your returns over the 1 month, it's about 18%. See, 100 you had invested 1 month ago, it would be 118 now. Same thing, you can compare it with equity large cap. Now, equity large cap, if you had invested about 100 rupees, it would have been 99 rupees. That's 1% decrease. Now, same thing over 3 months, you can see. It's failed to load 3 months data. Let's go to 6 months. Over the last 6 months, it has given 53% returns, while as equity large cap has only given 3% returns. Now, if you had invested on April 17th, 100 rupees, it would have given 64% returns as of now, while equity large cap would have only given 7% returns. So here you can see where does the portfolio invest in. This exposure is taken with the help of two ETFs from Zerodha Mutual Fund, which is Zerodha Gold ETF. The ETF aims to track the performance of gold by investing in physical gold. And Zerodha Silver ETF, the ETF tries to track the performance of the silver by investing in silver ETF. So if I go back, same thing for other aspects like 21G mutual fund asset location. But here the difference is that you have a minimum investment amount, but it is to subscribers only. Now, to get the subscription, you need to buy the subscription for by paying 2499 for 6 months. Now note that your actual return will be after reducing the subscription fee that you need to calculate. So that's the difference between a subscribed and an unsubscribed or free portfolio. So here as well, you can see what would be the returns of the small case with respect to maybe equity large cap. So over the last 1 month, this small case would have given 10%, but equity large cap only would have given 99%. Over the last 6 months, the small case would have given 29%, while the equity large cap only would have given 3%. So where is this allocating? See, current allocation, it will be 35% equity exposure because diversified allocation and sector leaders. 35% in silver ETF, 25% in gold ETF, etc. So these are the different allocations. Once we go to stock and ETFs, we can see there are 6 stocks and ETFs. Rebalance frequency. This will be rebalance on a need basis from time to time, and that will be selected by the small case manager. In this case, 21G investment. So now what are the constituents here that won't be visible here, but you can see the holding distribution. That large cap is around 10%, small cap is around 30%, gold 25 and silver 35. Now this will be rebalanced from time to time as per the market conditions. So a small case is a good way to gain returns from the market without spending too much time in understanding the market or going through the technical analysis of each stock or mutual fund. So you can select any type of, say, precious metal tracker. You can see the ETFs basically. It's about quarterly rebalancing, and here there's a gold allocation of 60%, silver 40%. You can see the portfolio report also here, etc. Now, if you go back to search, small cases can be further divided into volatile, medium, or high. If you are going into low volatile, you can see only the small cases with low volatility. Such as if I go to equity and gold allocation, now here it is rebalanced quarterly and there are only 2 ETFs. One is the Nippon ETF Gold piece and one is Nippon Nifty 50. Now these are not rebalanced often, so but their returns would be pretty good. So if I go to last 1 year returns, the small case has given about 25% returns, while the equity large cap has only given 4% returns. So a good way to invest is through small case, and you can compare the data with different months, etc., and different types of small cases. That's the main advantage of small cases basically. And you can select the volatility. See, this volatility, by what they mean is that this won't be fluctuating up and down very often. Say this curve is relatively straight. I mean, when you compare it to say medium volatility. So if I go for medium volatility, you can see that it's really not. There will be more fluctuations than the low volatility one. So that is the difference with the medium and low. Now, if you want high volatility and maximum potential return, select high quality volatility and go here. See, there will be Maximum volatility here, but you can expect periods of very slow growth as well. So depending upon your risk appetite, you have to select which small case to choose in and which to select based on low, medium or high volatility. You can arrange it also based on your subscription fee. So that's about it for small case. Do compare your potential CAGR and select small cases. Thank you so much. See you in the next video.